Have you ever wondered why some countries seem to move faster when it comes to new technology, while others struggle to even understand it? Well, one country that's quietly becoming one of the most important crypto hubs in the world, not the US, not Singapore, not Dubai, but the Netherlands. And what's interesting is the way it's happening, not through hype, not through speculation, but through policy, infrastructure, and education. So today, we're going to break down why the Netherlands is positioning itself as a global leader in crypto and blockchain, and what makes its approach different from the rest of the world. To understand what's happening now, we have to look back. The Netherlands has a deep history of finance and trade that stretches back centuries. Amsterdam was home to the world's first stock exchange, established in the year 1602. It was home to some of the first publicly traded shares, and one of the earliest global trading corporations, the Dutch East India Company. These weren't just business milestones. They were financial innovations that changed how the entire world thought about money, ownership, and investment. So experimenting with new financial models, not new here. Innovation is part of the cultural DNA. Now fast forward to today, the Netherlands is one of the most digitized economies in Europe, with nearly 98% internet penetration and widespread adoption of online banking, contactless payments, and digital identity systems. The Dutch population is comfortable with digital-first financial tools. They've been using chip cards, mobile banking, and instant payment systems for years, which means moving from traditional finance to crypto doesn't feel like a radical shift. It feels like the next logical upgrade. This cultural readiness is a massive advantage that many countries simply don't have. Now, one of the biggest barriers to crypto growth globally is uncertain regulation. Countries like the US are still debating, is crypto a security? Is it a commodity? Who regulates it? Is it allowed or not? This confusion creates fear. Companies don't know if they'll be shut down. Investors don't know if their holdings are legal. Everyone's operating in a gray zone. But in the Netherlands, the approach is very different. Here's the core idea. Crypto is legal, regulated, and treated as private property. But, and this is important, it is not legal tender. So you can use it, invest in it, and build businesses around it. But you must follow transparent rules. This includes registering with De Nederlandsche Bank, or DNB, if you offer crypto services, complying with Know Your Customer and anti-money laundering laws, and filing taxes clearly, including on staking and capital gains. Now, since 2024 and 2025, something massive changed. The European Union's markets and crypto assets regulation, known as MiCA, went live. And the Netherlands didn't just adopt it, they became one of the first countries to fully implement it with actual infrastructure. MiCA standardizes crypto laws across Europe. Every crypto firm serving Dutch customers must now obtain a formal MiCA license by December 2025. That's not a suggestion, it's a legal requirement. And what's interesting is how the Dutch regulators are handling this. The Authority for the Financial Markets, or AFM, isn't just throwing companies into a bureaucratic nightmare. They're offering streamlined application processes and something called pre-scan consultations. Essentially, companies can sit down with regulators before they even apply, get feedback on their business model, understand exactly what they need to fix, and then submit a proper application. This reduces rejections, saves time, and builds trust. That matters, because businesses now have clear licensing requirements, predictable compliance rules, and reduced legal uncertainty. This is one of the main reasons global crypto companies are coming here. They know the rules, they know what's expected, and they know the goalposts won't move overnight. But, and this is crucial, the Netherlands also enforces the rules with real consequences. In 2024, Crypto.com was fined 2.9 million euros for operating without proper anti-money laundering registration. Before that, Binance and Coinbase were fined approximately 3.3 million euros each for similar violations. And in 2025, OKX was fined 2.25 million euros for serving Dutch customers without registration. These aren't arbitrary punishments. They're enforcement of clear standards that everyone agreed to follow. This balance, encourage innovation, enforce compliance, is what makes the Dutch system stand out. Not crypto free-for-all, not crypto banned, but crypto done responsibly. And that approach is attracting serious long-term builders, not just short-term speculators. The Dutch government is not just regulating crypto. It is actively supporting the ecosystem in ways most countries aren't. Let's look at some proof. The Dutch Blockchain Coalition, a partnership between the government, universities, and private companies, spent 7 years building blockchain use cases across logistics, healthcare, education, renewable energy, and cross-border payments. These weren't theoretical projects. They were real pilots with real outcomes. For example, they tested blockchain-based systems for tracking pharmaceutical shipments to prevent counterfeit drugs. They built identity verification systems that let citizens control their own data instead of handing it to corporations. They explored renewable energy trading on blockchain, where neighbors could buy and sell solar power directly to each other. And in 2024, after achieving its mission, the coalition officially closed, but it didn't disappear. It transitioned into new innovation groups focused on tokenization of real-world assets like real estate and art, digital trust frameworks for secure online interactions, and interoperable identity systems that work across borders. This is what strategic innovation looks like. It's not flashy. It's deliberate, collaborative, and outcome-focused. Meanwhile, Dutch banks like ING and ABN AMRO aren't sitting on the sidelines. They're actively testing blockchain payment rails. ING has been running pilots on cross-border payment settlements using distributed ledger technology. ABN AMRO has been exploring tokenization of financial products, including bonds and securities. These aren't press releases. These are live projects with real money moving through them. The government also holds public discussions on crypto taxation transparency. They don't hide the rules. They publish guidelines, host forums, and answer questions from both individuals and businesses. Regulators offer consultation calls to startups applying for MiCA licenses. Think about that for a second. In many countries, regulators are gatekeepers you fear. In the Netherlands, they're advisors you can call. This reduces the biggest fear new companies have: regulatory uncertainty. Here, the rules are known and the regulators are approachable. That's a game changer for entrepreneurs trying to build something meaningful. Now let's talk about the startup scene, because this is where things get really interesting. Cities like Amsterdam, Rotterdam, Utrecht, and The Hague have become Web3 development clusters. Right now, the Netherlands has over 350 blockchain and crypto startups. And these aren't just random projects. They're building real infrastructure. There are decentralized exchange tools that let people trade crypto without intermediaries. Web3 gaming studios creating games where players actually own their in-game assets. Non-fungible token platforms used by Dutch sports teams and cultural institutions. DeFi infrastructure teams building lending protocols and liquidity pools. And then there's something particularly fascinating: AI-driven green mining platforms. Mining operations powered by renewable energy and managed by automation plus artificial intelligence. These aren't the energy-guzzling Bitcoin farms you hear about in the news. These are operations that use hydro, wind, and even waste heat recycling. Some mining companies in the Netherlands have integrated their operations with local heating grids. The excess heat generated from mining computers is captured and pumped into community heating systems. That's the kind of innovation that changes the conversation around crypto's environmental impact. Energy-efficient mining is particularly important because Europe has some of the tightest sustainability rules in the world. So mining companies here focus on proving that crypto can align with climate priorities, not work against them. This approach attracts ethical investors, venture funds focused on clean tech, and researchers looking at sustainable blockchain infrastructure. And the Netherlands has other massive advantages: a highly educated, multilingual workforce, strong infrastructure including internet, transport, and legal systems, access to EU funding programs specifically designed for tech innovation, and a startup-friendly tax environment for early-stage companies. There are also blockchain research and education centers at institutions like TU Delft and the University of Amsterdam. These universities are running dedicated blockchain labs where students and researchers collaborate on everything, from consensus algorithms to tokenomics models. Students are graduating with crypto literacy built into their education. There are numerous blockchain and crypto job openings across the country, reflecting real sector growth, not hype. Local governments are embracing Web3 in public services and identity management. Dutch payment processors are integrating crypto merchant solutions, so businesses can accept Bitcoin, Ethereum, and stablecoins at checkout. All of this makes it easier to start, scale, and sustain a crypto business here. Let's talk about actual people using crypto, because adoption is what really matters. In 2024, the Dutch crypto market was worth $26 billion, and it's projected to grow to over $60 billion by 2033. That's nearly 10% annual growth, significantly outpacing traditional financial sectors. But here's the more impressive stat: 2.5 million Dutch adults use crypto. That's about 14% of the population. That places the Netherlands among the most active crypto countries in Europe. What are they using? The most common assets include Bitcoin, Ethereum, XRP, USDC, and Solana. But there's particularly high penetration of DeFi and stablecoin usage among freelancers and small to medium-sized enterprises, or SMEs. Freelancers are using stablecoins like USDC to receive payments from international clients, avoiding high bank fees and currency conversion costs. SMEs are exploring DeFi lending to access liquidity without traditional bank approval processes. This isn't speculation, this is utility. There's also growing interest in real-world asset tokenization, where physical assets like real estate, art, or invoices are represented as tokens on a blockchain. Green blockchain projects focused on carbon credits and renewable energy certificates, and NFT-backed digital identity, where credentials, diplomas, and certifications are stored as NFTs that people actually own and control. And crypto education is everywhere. University courses at institutions like the University of Amsterdam, hackathons hosted by tech communities where developers compete to build the next breakthrough app, Telegram community meetups where people discuss trading strategies and new projects, crypto energy cooperatives where members pool resources to mine sustainably, public blockchain awareness events aimed at reducing misinformation. Major Dutch universities now offer blockchain modules in their computer science, finance, and law programs. This reduces misinformation and reckless investing, something many countries struggle with. When people understand the technology, they're less likely to fall for scams and more likely to use crypto in meaningful ways. There's also the popularity of NFTs in Dutch sports and culture. Football clubs are issuing fan tokens. Museums are experimenting with NFT-based digital exhibitions. Artists are tokenizing their work and selling directly to collectors without middlemen. Here's something many people miss. The Netherlands doesn't just follow EU policy, it helps shape it. Dutch regulators contributed directly to the MiCA framework, anti-money laundering supervision standards, and cybersecurity practices for digital assets. They were at the table when these rules were being written. This means other European countries now look to the Netherlands as a reference model. International investors see it as a stable launchpad for operating across the EU market. If you get licensed here, your business can serve all of Europe, a market of 450 million people. That's powerful. It also means that Dutch companies often get a head start when new EU regulations roll out, because they've been involved in drafting them from the beginning. This gives the Netherlands a first-mover advantage within the European crypto landscape. The Netherlands is also deeply involved in pro-EU collaboration on digital assets. They're pushing for standardized rules that make it easier for blockchain companies to operate across borders, for citizens to move their digital assets freely, and for regulators to coordinate on enforcement. Dutch authorities are even experimenting with stablecoins and central bank digital currencies, or CBDCs. They're researching how a digital euro could work, what the risks are, and how to protect user privacy while preventing financial crime. These aren't distant ideas. These are active research projects with government backing. Crypto innovation also brings challenges, and the Netherlands faces those head-on with some of the most advanced enforcement in Europe. In 2024, Dutch police seized over 41 million euros in crypto linked to cybercrime, the largest such seizure in Dutch history. Cybercriminal groups were operating ransomware networks, fraud as a service platform, and dark market settlements. But the important part isn't the crime, it's the response. The Netherlands actively monitors blockchain networks using advanced forensics tools. They partner with Europol on digital forensics, sharing intelligence and coordinating cross-border investigations. They train officers specifically in crypto tracing tools, teaching them how to follow money through decentralized networks, identify mixers and tumblers, and work with exchanges to freeze suspicious accounts. Dutch law enforcement is among the most advanced in Europe when it comes to investigating crypto-related crimes. They understand the technology, they have the tools, and they coordinate internationally. This increases trust, which increases adoption, because people need to know that if something goes wrong, there's a system in place to help them. This also ties into the stringent anti-money laundering and know your customer protocols required for all registered crypto firms. Every exchange, wallet provider, and crypto service must verify user identities, report suspicious transactions, and maintain detailed records. This isn't optional, it's the law. Let's summarize the key reasons why the Netherlands is becoming a crypto hub. First, clear regulation through MiCA and DNB supervision. This means businesses can operate with confidence, knowing the rules won't change overnight. The December 2025 licensing deadline is forcing companies to get compliant, and the AFM's pre-scan consultations are making that process manageable. Second, active government and bank support. This encourages real experimentation and actual use cases, not just speculation. Public-private partnerships are trialing blockchain in food, energy, and public records. Dutch banks are testing tokenization and cross-border payments. Third, a thriving ecosystem of over 350 startups. This creates constant innovation, attracts talent, and builds momentum. Amsterdam is leading as a European innovation zone with regular conferences, hackathons, and events like Dutch Blockchain Week sustaining that momentum. Fourth, a digitally mature population. When people are already comfortable with digital finance, crypto adoption becomes natural, not radical. With 2.5 million adults using crypto, the Netherlands has one of the highest adoption rates in Europe. Fifth, strong cybersecurity and enforcement. This protects consumers and builds the kind of trust that sustainable markets need. Record seizures of criminal crypto and advanced law enforcement capabilities send a clear message: crypto is welcome, but crime is not. And sixth, international policy leadership. By helping shape European crypto regulation, the Netherlands attracts global entrepreneurs and investors who want access to the entire EU market. The country's strategic geographic position and digital infrastructure boost its global crypto footprint. There's also the Dutch focus on green and sustainable blockchain. Energy-efficient mining, renewable energy integration, and environmental responsibility drive adoption among ethical investors and align crypto growth with climate goals. And let's not forget the transparent taxation system. The Netherlands uses Box 3 for wealth tax on crypto holdings and Box 1 for income from activities like staking. Clear and moderate, no surprises. The blockchain market in the Netherlands is projected to hit $2.4 million by 2032, growing at a compound annual growth rate of 85% from 2025. That's not hype. That's infrastructure being built in real time. This is not hype. This is infrastructure. The Netherlands isn't trying to win crypto culture. It's building the legal and technical foundation for the next financial system. So the real story here isn't that the Netherlands is pumping crypto markets. It's that the Netherlands has recognized something very important. Money is becoming software, and they want to be one of the places where that software is built, not just traded, but designed, developed, and deployed. They're creating an environment where entrepreneurs can build without fear, users can participate with confidence, and regulators can protect without stifling innovation. That's the formula, and it's working. Thank you for watching. Tell me in the comments, which country should we break down next?